Welcome, everybody, to another episode of the Ag View Pitch. We're heading into a new marketing week, October 28th through November 1st, and it is the end of October, crazy enough, pretty wild. Also, today we have with us Pete Meyer to talk markets and to educate us today. How's it going, Pete?
Coffee with Chris on a Saturday morning. I got my Dunkin' Donuts cup. I'm good to go. Yep.
Well, good. Good deal. Good deal. Before we get going here, I do want to put a plug in again for the AgView Executive Business Conference. That's going to be January 22nd through the 25th in Fort Lauderdale, Florida. And Pete, you're going to be one of the premier speakers, presenters there. And you were there last year, so pretty good conference, wouldn't you say?
Yeah, no, it was a really good conference, but I wouldn't call me a premier speaker. But no, I thought it was a very good conference. It was in Arizona last year. Good people, good conversation. The social events really allowed you to network with with other farmers and stuff like that. I think that you guys took the time to make sure that the social events matched up well, and I saw a lot of conversation. A lot of people seem to strike up conversation with new people in different parts of the country, and at the end of the day, that's what it's all about, right? So, yeah. No, I'll God willing, I'll be there. Yep.
Yeah, well, we're looking forward to it. Going to have you and Jared Creed and Joe Vaklovic on the stage, arm wrestling on where the markets are going and talking economy and lots of different things. And we got Paul Neiffer talking on all the new tax laws and things that might be coming our way, and Dr. David Cole, and just some really good educators, and some people from Farmer Mac will be talking about the economy, land values, all kinds of things. So if you're not signed up, please do that. You can go right on the AgView Solutions website to get signed up. We do have some slots yet, and that's why we're advertising it, because we have room for 150 in total. We keep that a small group on purpose. And so if you are going to get signed up, please do it soon, because it will get full and then we have to turn people away, which we do not want to do. With that said, Pete, let's talk markets. I just mentioned Paul Neiffer and taxes. I think we'll start kind of in reverse order. Let's hit on the election, a big thing. We'll come back and talk about harvest and stuff, but we're not very far away. This is probably the last week before the election. I know a lot of people are probably going out and doing that. Is there any correlation directly to the commodities or things that we should be thinking about from one administration versus the other? If anybody wants to send hate mail, send that to Pete, not to me, because I'm busy. But what's your thought? What's your take, Pete?
I think it's critical, and I don't think it's a excuse me. I don't think it's an ideological issue either. I think it's going to have an impact. I was watching Paul Tudor Jones on CNBC this week, and he said all roads lead to inflation, regardless of who's in the White House. That on its own would be very bullish commodities, but he is long commodities, and he admitted that on the show. But the inflation view for me is a bit worrisome. I don't really think. Everybody was all hyped up on getting a 1.5 rate cut before the end of the year. Now it looks like that could be just by the wayside. We got our half a point, and that's the end of it, because inflation has cooled a little bit, and they're not being as aggressive as they wanted to. Trump has suggested that should he get elected, he's going to push interest rates lower, and that the Fed should not have as much control over it as it does. Harris has said nothing. Trump is very anti-biofuel. Trump is very pro-tariff. Harris has said nothing. So, to me, Trump's comments in his acceptance speech in Cleveland when he accepted the nomination, and he called the Inflation Reduction Act a Green New Scam. Let's not forget that 45Z and all that entails, as far as sustainable aviation fuel and the federal tax credit, is all in the Inflation Reduction Act. He's pretty vocal about it. He's pretty angry about the fact that John Deere moved these jobs to Mexico, and any part coming in from Mexico now is going to have a 100% tariff. And, so and we all know what he said about China. I mean, he hates China. China hates him. Even though I saw in the news last night that China seems to have hacked into both parties' phones to listen to what they're talking about. But in the long run, if you believe that Kamala Harris is going to continue Joe Biden's policies, then that would include the Inflation Reduction Act. That would include 45Z. That would be positive for prices for agriculture. If you believe Trump at what he says, that's not going to be positive for agriculture. Now, I've already heard pundits and other people saying, well, when Trump gets in, it's going to be okay. He's going to take care of the farmer. He's going to hand out all this money. Okay, that may be true. But in my humble opinion, that's how this whole inflation thing started, with the market facilitation program, followed by the PPP, even though PPP was not his deal. I get it. But free money causes inflation. And then inflation causes everybody in the support network around the area, in this case farming, to want their piece of the pie. And in this case, that was the union that represents the workers at John Deere. And then it just grew from there, right? We've seen no reset of inputs. It's hard to say, Chris. I don't. At the end of the day, a guy who much smarter than me in the business, who works on the grain origination side, works for a major grain company, said to me 2 weeks ago, we got to find more demand for this shit. It's true. Mm-hmm. Yeah. It's true. And I don't, exports, yeah, okay, we've had some nice exports here, and everybody's jumping up and down, and yeah, let's go. Well, we all, that's all great. Mexico's buying a lot of corn. Mm-hmm. Is Mexico pre-hedging an election? China's not buying corn. Is anybody buying corn at the moment pre-hedging an election, including Mexico, because Trump has already said on the record he's going to impose all these tariffs? I mean, it's gotten to the point now, I saw recently, where he said that he thought tariffs would take the place of a federal income tax. God bless him, but boy, I don't know. I don't see it. But I think the problem we have, Chris, in the corn market is that we need a lot of demand. So let's talk about next year. Let's just talk about where the profitability is at the moment. And you correct me if I'm wrong. At next year's prices, you could lose money on both ends, but you're more likely going to lose less money on corn. Is that correct?
Yeah, in most scenarios. There's exceptions to that in places, but in general, yes, I would agree.
So I hear that from a lot of people. I hear they don't want to plant beans, tired of losing money. We produced a 15 billion bushel crop this year. Can we produce a 16 billion bushel crop next year? I think you can. I mean, unless we have a drought. So, 183 and change. I don't think the yield's going to change much, Chris, now. Certainly not in November. Maybe we get a little adjustment in January. I know there are folks out there beating the drums. Oh, we're going to get a cut. We're going to get a cut. Yeah. Anyway, let's say it's 185. Let's say it's 95 million acres, which was the 2023 number. So let's not think that that's just thrown out. I think we planted 94.6 or 94.7 or something like that. It's not that far off. You get to a 16 billion bushel crop. So my point there is that we need demand. We need demand, especially for corn. I don't know, given the current, no matter who gets in the White House, Chris, I don't know of the current way the pie is being sliced, if I could point specifically to one sector and say, yep, that's going to be our growth sector. Mm-hmm. I just don't know.
Yeah. Well, I think regardless of what administration, there are double-edged swords everywhere. And I think the big thing is that people just need to be educated, and then ultimately need to vote for what they think is the right thing. I mean, I'm staying right in the middle lane here and not going to get too risky, but I think it does come down to that, though.
I'm a Republican, but at the end of the day, you have to take a step back and just have to look at,
consequences of either side.
Ideology. Correct. I mean, look, both of them are going to affect your wallet. One way or the other. Mm-hmm. So I don't know. And there's no guarantee that if Harris were to get elected, that she would keep the Inflation Reduction Act, and all of a sudden we would get this miraculous information on 45Z, which we desperately need. We desperately need that. And we were promised it in March. We were promised it again in July. Now we're promised it in December. If who knows when it's coming? It's probably coming at the same time as the Farm Bill, which will be next March sometime.
Mm-hmm.
So, or this coming March, I should say.
Yeah. We'll be.
I don't know.
Yeah, we'll be a lot smarter on some of that stuff by the time the conference comes around too, and we'll be able to kind of slice and dice some of that stuff at that point for sure. The election, you talked about that, and that leads to demand and that type of thing. Let's ratchet that back to a little bit more short term. What do you think, as we wrap up harvest here, do you see for some kind of a price ranges with the absence of the demand and everything else and all this abundance of grain and basis issues in a lot of places? Is there, and I'm not talking basis first, I'm talking flat price for both corn and soybeans for that matter. What kind of ranges, can a farmer kind of be looking for and maybe pull the trigger if a person needs to on some more sales before the end of the year?
I think this week was it's an interesting point that you bring up here. I think this week, and let's start with corn as a microcosm of what the range is. Right, I've been saying for a while, Chris, that I think everything below, and we're talking basis December futures, right? Just
Yep.
Not basis, but basis December futures. Everything below $4 is noise. Everything above 425 or 430 is noise. I live by that. I've been saying it for a while. We traded down to the 390s and then we pounced back up. And this week we traded in the 420s, 421. Everybody gets all hyped up. Boom, there it comes. Here we are. We closed right in the middle of that range at 415 on Friday. So I think that, it represents opportunities either way, right? Below $4, it represents a buying opportunity. I'm not suggesting farmers re-own their crop. That's the last thing in the world I would suggest for anybody. I don't believe in that at all. But, above 425-ish, I think you have to kind of look at it because I don't really see anything on the horizon. The production story's done. If we get a production story, let's talk about this a little bit. I think that if as a U.S. farmer, you now have to trade South American seasonality. Mm-hmm. And I've said this on Chip Flory's show. I've said this to other people, Joe Vaclavic. I've said this. That's just the way it should be and the reason for that is because we've lost the soybean export market for sure, and the corn export market is teetering. So I could make the argument that, Brazilian seasonality or issues with the Brazilian production, if you want to trade production issues, should be looked upon by the U.S. farmer as a selling opportunity, just given their prominence in the export market. So above 430, kind of noisy, Chris. I'd let some go. Obviously, anything above that, and I get it that for some it still may not make them profitable. Below $4, I don't get too excited about stuff. Mm-hmm. Beans, I think, are in a ton of trouble. I think beans have $1 downside. I think you can see sub $9 beans here. And I think this week we traded up to 10.12 yesterday, on Thursday, and boom, down 25 cents like it was nothing. I think that sellers above $10, I don't see any issues in Brazil with that production. The crop, everybody was jumping up and down about how dry it was, and then on top of that came Chinese stimulus, and then we traded up to 10.50, and everybody's like, "Yep, here we go." I've really become a contrarian on this stuff, Chris. I really have. I don't like to think with the herd, and I think that we've found over the years, most recent years, that the market adjusts itself pretty quickly. Mm-hmm. What's the market telling me now? You know this. You've known me for a long time. I'm fond of saying sometimes I just sit back and listen to the market. The market's telling you it's $4 and $10, right? It's a 2.5 multiplier, and here we are.
Yeah.
The market is telling you, despite the fact that the spreads really narrowed before they widened later on, but really narrowed in the middle of the week. Especially, I was looking at the DEES, Chris, and it narrowed into 20 cents. It was I don't know, 35, 40 cents just a little bit ago. I think nobody's interested in owning deferred crops. Nobody's interested in owning next year's crop just based on what we said a little bit earlier. So, I looked at the D's March that everybody says, well, there's my carry. I mean, you kind of lost some of your carry. Okay, it went back out to 26 yesterday. It was in as far as 23 and change. The day before it was 35. Just last week, I think, or 35 or 36 a couple weeks ago. But if you zoom out, Chris, the July price hasn't changed at all. It's all the noise in the front in December and the algorithms and whatever trying to push that market around. So again, I'm listening to the market. The market is telling me that's a fair price for July. July is kind of, if you zoom out, it hasn't moved. So I do not get too excited about any movement in the spreads. And again, I'm not very bearish soybeans, but I think that that's where your risk is. Your risk is sub $9 beans.
Yeah. And it's a little different for soybeans as we, are in this week of, the last week of October, because the soybean harvest for all practical purposes is pretty well done. But corn is maybe not so much yet in some areas. It's obviously completely done in a lot of areas, but still hot and heavy in some pockets. What I want to transition that over to for a minute is basis. When the doors get shut on corn in another couple of weeks, kind of like they are with soybeans, does basis have to do the work, and how much work does basis have to do? Because I think a lot of farmers, you give that range. Let's just use corn as an example to let's say 420. There's still going to be a lot of guys that will just sit on that. Is that going to create an opportunity on the basis side, or do you think there'll be enough of grain, being sold in those ranges that's going to make basis not give us that much of an opportunity?
I think if last year taught us anything, it's locking the bin is very dangerous.
Mm-hmm. Yeah. Well, I think it
I
is.
mean, at the end of the day, all you got to do is go back to the June quarterly stocks report when we had 5 billion bushels of corn, 3 billion bushels, and the market imploded.
Yeah. Right.
Look, here's the way I look at this, Chris. I mean, I know you and I were talking before you started to record about the fact that where you are, it's you're getting going and you're drying corn, or you're in the middle of it, so to speak, because you got to late plantings and this and that. I mean, there's a lot of stuff in Western Iowa, southern Nebraska, some of these other states where these elevators are full.
Mm-hmm.
They're full, and basis is imploding. Ethanol guys are full, and I mean, you've seen gas prices. It's cheap, right? Gas is below $3 nationally for regular gas. So that's not telling me there's going to be a lot of additional ethanol demand coming forth here for. So, I don't know about. I don't really know about. I would take the lead from you on basis opportunities, Chris, because and maybe I'm just a little gun shy, but when we look at a 26-cent carry from D's to July, so that's what 6%, 6.5%. Okay, from $4 corn, I can kind of see storing it, but I think you have to take advantage of every opportunity that presents itself, and don't be stubborn here, because last year, we saw that it would only take one. If we can get corn back up, let's say to 4.25, it would only take one of these big buy cans that we've seen over the last few weeks, cancellation in early next year to just kill the thing. Mm-hmm. So I don't know, Chris. The storage thing.
It's definitely it's definitely difficult to think you're going to close the doors and sit on it, and that's kind of was my point for asking, I guess, is that there's going to be some pockets where basis is probably going to be okay in areas where the yields weren't that great, but you're also going to have the majority of the areas where the yields were excellent to better than excellent, that, like you said, if the elevators are full and the processors are running at 75% because of where demand's at, it's really going to limit our opportunities, I think, on basis. And that's my 2 cents anyway. I think it's going to be real limited.
Well, yeah, I think you have, the other thing you have to worry about, in my opinion, is how dry it is, right? So the market may start, even though I see that there's some rain coming for a lot of folks, even though I totally understand. And, I've spent the last 2 weeks in Iowa, and it's unbelievable how dry it is. It's dry throughout the country. But, you know, there will be folks making a story about how dry it is, trying to push the market higher, right? And for next year. And I get that, but as I said earlier, December 25 has been kind of staying around 450 level and hasn't really moved. So I don't know if that's story. But the dryness also has another issue, and that's the Mississippi River levels. So, you want to talk about basis. I mean, you need demand to create, higher basis, right? And if it stays dry, maybe concern about next year mitigates the fact that the Mississippi River is going to drop because, what export market we have. And look, the ethanol demand for corn is kind of flat. So we're going to have to depend on export demand. And we did get excited this week about export demand to Mexico and whatever. And we traded above 420, almost to 425. But if the Mississippi River gets too low and it really gets dry, that's gonna kill basis. That would crush basis.
Yeah. Yeah. Well, the last thing.
So it's
and the last thing I want to hit on here and is, and you kind of gave us a segue to it, is just the new crop. When we see that 425, corn on the D24 or whatever, and you're looking for, a decent price or a place to start some sales or whatever, kind of quickly here, and we'll wrap things up. But kind of what are some ranges you're looking at on the corn and soybean side on the new crop? I mean, soybeans are kind of hopeless currently, unfortunately.
well,
On the
yeah.
corn side
I
specifically.
don't. Where did we close? So we closed December corn at 441, and then we closed November 25 beans at 88 or something like that. I mean, I talk to guys that are claiming that beans have to get to $11 before they even make a penny on it. So,
Well, a lot of guys
that's a tough. A lot of guys, what?
There's a fair amount of guys that won't make money at $11. So, unfortunately,
see,
that's
right.
That's really the issue.
Right. If we agree that soybeans have to be well above $11, I mean, can we get to $11 by spring planting? So then, unless a massive implosion happens with Brazilian weather, and and it doesn't rain between now and April 1st, right? Okay, then we get it. Then we get it to that level. So what does that mean? That means more corn acres. It gets back to our other issue. Certainly, I think that if I believed that above 430, or especially above 450, is noise in the front, I would just add 25 cents to that in the back. So I think that if you got corn up to, 460, 470, 475 level, I would certainly be making some sales. But I know that may not be profitable for some folks. I'm just very concerned about about what the corn bean acreage numbers are going to look like next year based on conversation with farmers. Yeah. It's very concerning. And, and we get the USDA outlook form in February. I don't know. That thing seems to have lost its impact on markets. But I would expect them to be, 183, 184-ish on yield, maybe even a little bit higher than that. And certainly I would think they're going to 2023 acres, which would be 94.6, 94.7 in corn. So
yeah, well, I think it's we need to make sure we're calibrated for the likelihoods of what's coming our way in the next few weeks, months, figuring out the financials for the end of the year and that type of thing. I think is going to be a real big thing. And then looking at that cost of production for going into 2024, I think will be huge, or excuse me, into 2025 will be huge, I think, too, just because, like you said, if there are some opportunities in that 460 range. That does get a lot of guys close to at least kind of covering the majority of their expenses, and people got to get started at some point probably on that. But I'm going to give you the final word. Anything I didn't ask, anything we didn't talk about that we need to hit on, and then we'll wrap it up.
No, I think we're good. I'm very disappointed in the in the lack of information around 45Z. As I said, Chris, I mean, I think that the production stories in general have corrected themselves much quicker over time. I think that speaks to the resiliency of the global farmer. So now we have to focus on demand, and I just don't like the demand story enough to get us to, let's say, $5 or 5.50 corn, or
Mm-hmm.
certainly 11.50 or $12 beans. I just don't like the demand story enough. So, we've had one round of failed Chinese stimulus. That's really what pushed the bean market up to 10.50 a few weeks ago or a month ago or so. Will they, if they come back with another round of stimulus, will the bean market react the same way? Probably not, because fool me once, right? Fool me twice, I'm done. So I just think we're kind of stuck here, and I don't think that the funds have really any interest on it. If the funds have an interest or believe, as we started this conversation with Paul Jones, who's one of the most successful hedge fund managers in history, all roads lead to inflation. Then commodities are cheap, but
Mm-hmm.
I don't know. I don't know. I mean, oil is just hanging around $70, hanging around. I mean, we were joking a few weeks ago with a group that if this had been 5 or 10 years ago and we had everything going on in Israel and Lebanon and Iraq and Iran and everything that's going on in there, if that had been going on 5 or 10 years ago, oil would have been at $100 like it was nothing, and it would have dragged everything else up with it. And now we don't see that anymore. We see this big reset on commodities very quickly. Granted, there's a lot of issues with oil that, as far as domestic production, domestic supply here in the U.S. that have changed over the last 10 years. But it's, I don't know. We
Mm-hmm.
just seem stuck. I
Yeah.
mean, we're most likely everybody's waiting for the election.
Yeah. Well, it'll be interesting, and the one thing I can tell you, Pete, is I think the listeners that listen here that are on here tend to be really good business people that just happen to farm, and I think I'm pretty optimistic. I think even when margins are tight and things look the way they do, we'll navigate that. We've done it before. We'll do it again, and I think we all got to stay positive, and I think we'll get through it. And regardless of what administration's in there, 99% of the guys listening to this are going to be pretty prosperous anyway.
Yeah,
But
I would agree. You could never ever underestimate the resiliency of the U.S. farmer. I mean, it
yeah,
is what he or she does, and they do it the best in the world.
yep.
But it's hard.
It's
I don't think people
tough road.
realize how hard it is. Yeah.
Yeah, for sure. Well, hey, Pete, I really appreciate your time today, and we'll get you back here in a few weeks as we get completely through harvest, and we kind of have a little bit more maybe to talk about after the election, and kind of see where your 45Z and some of this stuff could be going, and what things kind of look like, and really appreciate your time today.
Sure, my pleasure, Chris. All the best, and I hope everybody out there stays safe through the remainder of harvest.
Yeah,
And go vote,
yeah.
regardless of which way you want to vote. Go vote.
Yep, for sure. Yeah, go vote, and then also the thing I've wrapped up with the last couple of weeks is, if it's dry as it's been, nobody's gotten any rain days, and very few rain days anyway. And so if you're not getting your rest, take a rain day, make a rain day, get your sleep, and that's kind of what keeps you safe. And with that said, again, thanks to Pete, thanks to you guys, and we will catch you again next time on the Ag View Pitch.